Hi, everyone. Appreciate you showing up. Like the Investment Club of America, we always start our events right on time. At club meetings, we actually start at 6:59, but for the webinars, because we have a lot of people from the East joining us today, we're actually going to start at 5:59. This is a really important webinar because I know that there is a lot of confusion right now in the market, and it kind of follows up after the last webinar that I did with Mark. I felt we should dive a little deeper into getting positioned as investors pre-election and post-election. I'm really going to encourage you guys tonight to take notes of some things that I say. Some of the ideas you might say, yeah, I'm really going to implement that. Some of the stuff you could disagree. But I think I give broad enough information that everyone on the call is going to have a takeaway value today. So welcome to the Investment Club of America, our monthly meeting. It is rare, very rare in fact, that we do a webinar in place of a meeting. But in this rare instance, with our major event just a few weeks away, it was the best thing we could do logistically so all members could join the meeting in real time and not have to wait for the actual recording. I decided to do tonight's topic, as I said, after the last interview I did with economist Mark Skousen a few weeks ago. In the interview with Mark, we discussed a lot about the implications of the election. And in tonight's webinar, I've decided to dig deeper and address specifically what investors should do based on the results of the election. Stock market performance tends to weaken during the fourth year of a presidential term because investors on both sides of the political spectrum become paralyzed. Each side fears what will happen if the other side wins, so no one wants to put money to work and stock trading volumes shrink. Consequently, nobody is confident in their investments until they know which way the election will go. We must be realistic, and after the debate, which frankly was an embarrassment to all watching, and the media constantly pounding for right or wrong of the mishandling of the pandemic, it is definitely factual that Trump's chances of winning the election declined. A Trump win means an escalation of tensions with China. So definitely take profits on China A shares in the event of a Trump victory. Commodities might also slump as China turns away from buying American farm groups with a Trump victory. U.S. farmers might not be able to give their stuff away, and farmers will have to come up with new markets to sell to, such as plant-based protein producers, which is a tiny market in comparison to the behemoth that is China. So look, this is a little warm-up of a lot of information that I'm going to give you over. I always have my webinars, I say they start at 5:59 and I want to be totally done by 6:59. But again, I promise everyone on the phone that's here today, it's content, and you are definitely going to get value. President Trump's candidacy has been largely viewed as corporate, friendly, including lower taxes and a push for deregulation. But Biden's platform has called for raising corporate taxes and the minimum wage, which may put pressure on profit margins, especially for businesses that are not able to set a tax base in a place like Ireland or the Cayman Islands. The best stocks to buy under a Republican administration are sure to be different than those under a Democratic administration. The prospective winners under a second Trump administration, as I said, are a different mix than those that might shine under Biden in office. Now, I'm going to give some obvious ones, but I'm going to dig deeper because I really want you guys to have some opportunities to get out there and get placed early so that you can make some decent money and get ahead of the masses. Now, some of the obvious stuff that I will go through, Exxon, Chevron, and the like would likely face tougher regulations and maybe higher taxation for gasoline to help fund solar and wind power under a Biden administration. But to start today, my number one guidance is, and everyone, all the members know this, but we have a lot of guests on tonight, is to buy gold and silver. I believe that gold and silver prices will escalate further under Biden due to additional spending on stimulus. Gold and silver will also do well under Trump. It remains my top choice. Last January, when everyone thought I was crazy to offer guidance like this, I told members to increase their position in gold and silver to 20% of their entire portfolio. That means if you have a net worth of $1 million, I was basically saying put 200 grand into gold and silver. Now it's been several months, and here's the performance results. To date, this has been the best performing asset class. Also, during my 90-minute presentation last January, that the room was very crowded for our monthly meeting when I did it, the number one thing that I also spoke about was a recession was unlikely, but it could happen. If you recall, in January, 0% of people were ever calling for any type of recurrence for any sort of slowdown in the economy. And what I did was I gave 3 factors that would cause a recession. And the number one that I talked about, the third factor that I talked about was a pandemic, which was not even mentioned at that time. So, I certainly will admit when I'm wrong, but I'm telling you, bang on. So I think I've got some great ideas to share with you tonight. And look, for those who want to be very conservative with gold and silver, you would buy an ETF that just tracks the price of gold and silver. You might look at GLD for gold, SLV for silver. Now, for those who want to go to the next level, who say, yes, I believe fundamentally with a devalued US dollar that we're definitely going to see an increase in the price of gold and silver, and the fact that we're floating so much stimulus into the economy and we're weakening. In fact, the whole premise of a de facto world currency, which is the US dollar. So that's when the US dollar, the number one factor that causes gold and silver to increase, I believe, is a weakening US dollar. But there are a lot of other factors. Now, as an example, you could, and this is the next level of, I'll say, risk. But instead of just buying a gold and silver ETF that tracks the price of gold and silver, you could actually buy a ETF that tracks the price of gold producing companies. That's the next level of risk. However, what happens is when gold moves up, they typically move up higher than the price of gold. And the next level of risk, which tends to move up even higher, is junior producers. And junior producers are companies that are not as big as like Newmont and big gold companies like that, but they do have some producing mines. And I'll give you an example. One of larger gold companies ETF could be NUGT. That's an ETF. For juniors, it could be JNUGT. Obviously, by giving out these symbols and these companies, I have no personal benefit, no personal gain. It's simply to help you. What I'm also stating is the very best way to make the most money is when you pick out really good companies. ETFs, there's different, in my opinion, there's different levels of risk in the ETFs. And I started tracking the actual price, then I moved into producing companies, next level of risk, junior producing companies, next level of risk. And all that is true, but the highest level of risk is individual companies, but it's the highest level of reward. And for those who don't know and analyze gold companies and silver companies, that's why I was going with a more conservative, broad approach of just giving you guidance to go out and buy some gold and silver ETFs. I still believe gold and silver have a long way to run. It's had some recent consolidation, but it is still the #1 performing asset class of the year. Now, here's something else. I would rather, if you're starting out to accumulate, I would rather you accumulate about 60% in silver and about 40% in gold. The reason why, when I studied bull market runs and commodity prices, precious metals since 1960, in 5 out of 6 times, silver outperformed gold. And there's many other things that I could tell you, but look, even if you buy silver and gold, I'll tell you something. If it was to go down, you think, well, Mike, that's not good. That's a negative. Actually, it's not. It would likely mean that your other asset classes have maintained their value, your real estate, your bonds, your stocks. But what would happen if gold and silver were to skyrocket? That very much means that it's very likely that a lot of your other asset classes have been badly hurt. So that's what people mean by it acts as a hedge. And I really want you to bring that position up. Look, since I recommended it and I talked about it, gold was $1,400 an ounce and silver was $14 an ounce. Well, pretty much at this point, gold is much higher and silver is pretty much at a double. But there's still a lot of room to move, but it's simply a hedge and you need that insurance in your portfolio. Now, I called for 20% of your portfolio in January because I thought it was going to do a strong run, which it did. It has done a strong run, but I wouldn't do 20% because we could see some more consolidation. But I'm still bullish to a point where I would say 10%. And I know a lot of traditional financial advisors will talk as 2 or 3%. I'm going to talk about that a little bit later, especially for those who've never seen me before, because I have a lot of concerns on the teachings of the financial services industry. And a lot of times, and you get a feel for it tonight, a lot of the information that I teach at the club and so on is out of the box, but it's concrete, it's real, you can act upon it, you can make money. So if the Republicans were to win, oil and gas would obviously be a big winner. Investors in this sector would sense the relief from boardrooms in Houston and elsewhere, knowing they are safe from stricter regulation and perhaps a higher gasoline tax. Republican administrations have traditionally been friendlier to large banks than Democratic ones, and Trump's slashing of corporate tax was particularly beneficial to banks. In addition, as a general rule, Republican administrations are less likely than Democratic administrations to issue stricter banking regulations. Look, I've got to give a disclosure right now because it's important to do so, but I'm not a licensed financial advisor. I see trends and I give guidance on what I feel is the best way to make money. I'm going to give you a fantastic example that happened in 2003, 2004, 2005. My members know this example very well. I did a 90-minute case study with a few hundred people in the room, and there was Canadian Broadcasting Corporation and the Financial Post at the back. And I did a compelling reason why I felt uranium prices were going to go much higher. And at the time, there were 65,000 tons of worldwide supply and 95,000 tons of worldwide demand. And I'm not going to go into the fundamentals of why I discussed that for a long period back then. But what I did live on stage was I bought 10 stocks, 100,000 into each stock. And at that time, uranium was trading at $7.10 a pound. And what happened over the next 3 years, it went from 7 to 10 to 20 to 30 to 40 to 50 to 80 to 100 and eventually to $126 a pound. What happened to those 10 stocks is they went from 70, 80 cents to 30, $40, many of them. Uranium One, Chemical, things like that. Chemical wasn't that low at that point, but it was still only, it went up several hundred percentage points. But the point is that I don't always call trends right. As a matter of fact, there was one time in Alberta, I was the largest developer in Edmonton in a place called Stony Plain, and I was doing a very large development project. And at that time, America had its subprime crisis, and I basically went around to all the cities that we had investors in, and I said, look, in Canada, we don't have liar loans and we don't have no doc loans. You still got to qualify. You still got to put down 20% and so on. So I said, look, there will be a hit, but we've pre-sold 200 building lots to builders, and we've got an operating line of credit from Toronto Dominion Bank. We're going to weather the storm. What I did not count on, I went to all the cities, got full support of the shareholders and so on. What I did not count on or did not predict or know would happen would be the collapse of Lehman Brothers. Then Toronto Dominion decided that they were going to call my loan and cancel the 200 plus building lots that have been sold. So I went from hero to zero after many, many projects that had gone very, very well. And I learned along the way, sometimes you're only as good as your last deal and your last project. In the Investment Club of America, thank God, we've had a stellar track record for the last several years, and every deal has either met or exceeded expectations. And I'll talk a little bit about that a little bit later. So I do see trends, and I give guidance on what I feel is the best way to make money. I rarely name individual corporations, and I will say you must discuss with your own financial advisor before you take any guidance that I give. Tonight, however, I will name specific companies. I have no personal financial benefit in doing so, but believe it will be great guidance that will do well for you as an investor. I have many concerns about the financial services industry, and I've written a 300-page plus manifesto on changes I believe that must be made. Now, I will follow and have to follow the rules and the laws. I will, for the record, state that the money management industry is the most overpaid, under-talented industry in America. Now, here's the statistics. 96% of all money managers underperform the market index, but yet they see massive salaries and bonuses, and they fill up homes in places like the Hamptons. This is and remains the greatest fraud in America. I used to name names and talk about portfolio managers, and I would actually show how much money they made and how poorly their investors have done. Now I talk more in general terms, but I'll give you one example in general term. I know one naysayer who's been talking about the world collapsing and gold prices going up and skyrocketing for 12 years. His investors up until a year and a half ago were off 80% plus on their portfolio holdings with him. Yet he takes a management fee and draws an enormous salary every year. He goes out to the Money Show. He goes out to all these public shows. And then people join. They put money under management. He takes his fee. Meanwhile, they got crucified. Well, all of a sudden, after 12 years, guess what? He's right again, and he's got the same message. He's been banned from CNBC and every other public network that there's out there to talk. Some of you people I'm talking about this may know this guy, but he's still out there, and he's still revered, and he's still highlighted by organizations at the shows that he turns out to. So this is the real problem that I have, and I have faced lawsuits in the past. And, you know, my number one thing is to do the very best I can for the club members and the people who decide that they'd like to get involved. For the record, I also want to state I'm opposed to the abuse of share buybacks And in large part, they are motivated by executives taking the easy way out for their bonuses and incentive packages to kick in. Share buybacks have been great for investors, but they create no jobs, no factories, and no infrastructure. And think about it, if you got 100 million shares and as a management team, you buy back 10 million of them and you get the same demand, what's going to happen? The price is going to go up because you got less shares out there for sale and the same demand. It's crazy. It's absolutely crazy. The biggest buyer of shares, surprise, surprise, is Apple. The amount of billions and billions they spend on it, and even the airlines, let's think about it. How ridiculous is that? The airlines and these executives, they made so much money when things were going well. They spent all their money on share buybacks. Now they ask for a taxpayer bailout after the mismanagement of spending all their money and not having a nest egg in the event of a black swan event. That's inexcusable. That's why I don't support bailouts or any special treatment for airlines. Okay, I will once all the executives give back their homes in the Hamptons and all their boats and yachts and everything. I mean, you guys agree. It doesn't make any sense. Now, I normally, as I said, I don't discuss large companies because I find 99% of people who own the stocks in these large companies can't read the financial statements of the companies they are invested. A secular bull market creates a lot of geniuses that can't read a basic financial statement, let alone the majority of companies that they're invested in. Normally, I stick to smaller companies where their financials are easier to follow and much more transparent. And I can still talk to a senior officer in the company if I have a question. Most investors have forgotten about WorldCom and Enron and stories like that. So with that, I will discuss a few stocks today. And this is not a buying list for you. In fact, I don't own most of these that I'm unlikely to buy them. I'm primarily focused, as I said, on gold and silver stocks, but I know I have a broader membership base to service. So I do this simply in service to you, the members. So here we go. So again, no vested interest, just try and do what's best for you. If Trump wins, investors can expect relations with China to get even dicier than they already are, because the second term is always meant for creating a legacy. China will most certainly be Trump's stamp on his presidency. Thus, you probably don't want to overweight Chinese-based stocks. You might also avoid U.S.-based agriculture stocks, as China gives American farmers the cold shoulder. Collectively, Trump has been terrible for Canada's business community. But with a Biden government, the two countries can go back to being excellent allies and trading partners. So what I'm saying there is, to benefit from this improvement as an investment, iShares Canada ETF is sure to deliver healthy returns in Biden's 4 years in office. It will do well. I'm positive. If done right, it can also be a hedge on what I see as the continued weakness of the US dollar, because I'll see the Canadian dollar go up in relation to the US dollar. So be hedged there. In addition, your gold and silver. For sure, all investors should hedge a bet into Canada if Biden wins. Again, I don't own this next stock, but many of you on this webinar do. So I will discuss it. And I talk about stuff, again, that you don't really hear on the popular media, your CNBC, which in my opinions, in so many ways, that's just a talking piece to sell the largest companies in Canada and keep a steady flow of investors in the United States and the S&P 500 and keep a steady flow of investors coming in. If you're always talking about the same stock, people buy that stock, and that's just the way it is. So I'll talk about Amazon. With a Trump victory, this pick will be counterintuitive given the bad blood between Donald Trump and Amazon.com founder Jeff Bezos. But the Amazon certainty could benefit from Trump remaining in the White House. I'm going to say something very interesting right now that's completely out of the box for all of you. And it, just to keep you kind of fixed into what I'm doing here and have fun along the way. Every person on this call is at most 5 people removed from anyone on the planet. And let me give you an example. In this case, most of you who are watching this webinar know Mark Skousen. Mark knows John McKay from Whole Foods and John knows Jeff Bezos because, of course, he bought Whole Foods. So you are only 4 people removed from the richest man in the world. I say these, as I said, during a webinar because I think it's kind of a cool thing to share. And you think it out and you go, yeah, I'm very close to just about anyone on the planet. So Bezos owns the Washington Post, which has generally been critical of the Trump presidency, provoking the commander-in-chief's ire and Twitter rage. Conversely, Trump routinely bashes Amazon and has suggested the U.S. Postal Service should double the rates that Amazon pays. But while Trump talks through, his administration hasn't been in a hurry to actually do anything to Amazon, and attacking the company by way of UPS would seem a long shot. Meanwhile, Amazon has been struggling with labor unrest for years and complaints of harsh working conditions. This only got worse during the COVID-19 pandemic as some workers complained of unsafe working conditions. Imagine, this is a mind blowing, over 20,000 plus employees, okay? You would think, oh, that sounds like a large company. No, that's just the number of people at Amazon who contracted COVID, 20,000 plus. That's not their workforce. That's just how many got COVID. So you can see why they're concerned. And I'm going to go on why it's better for them that Trump would remain in office, because a Republican administration, this stuff, I think about this stuff late at night. It entertains. It's so mind-blowing. A Republican administration would be less likely to side with unionization efforts, as well as to interfere in the company's business on antitrust grounds. Of course, under a Biden presidency, it is hard to imagine the Amazon juggernaut slowing much, but a Trump presidency would favor the company, even if it does not seem that way at first blush. Again, I don't own this stock. I'm not going to buy this stock. It's not how I play the market. But I talk about it because so many of you do. I will say at this point, it is best to leave your politics at the door when you're investing. No matter how much you like or dislike the man in the White House, presidential policies generally matter a lot less for a stock market than Federal Reserve policy or the general health of the economy. We have certainly seen this over the last decade with the Fed heads overseeing low interest rates. Most national polls show Biden with roughly a 9% lead, but his lead in the 6 battleground states that really matter this election, Arizona, Florida, Michigan, North Carolina, Pennsylvania, and Wisconsin, is less than 4%, which is barely outside the margin of error. In other words, the race is not over. I am guiding everyone on the call this evening to take profits and raise some cash. It is likely with the Biden victory, investors could see a huge stock sell-off due to all the tax consequences on capital gains with a Biden victory. As a general rule, Republican administrations are less likely than Democratic administrations to issue stricter banking regulations. This matters because following the COVID economic upheaval, the next president will be in a position to address consumer bankruptcy and a host of other issues. Now, the election aside, JP Morgan is attractively priced in an otherwise expensive market and pays a dividend yielding almost 4%. JP Morgan will likely fare better under a Trump administration, but it probably would not do poorly under a President Biden either. Bank of America isn't a bad stock at current prices either. It yields 3% in dividends. And when Warren Buffett recently topped off his already large position in Bank of America, he put in another 800 million. And so I'm just kind of saying it's an area that's been beaten up. It's an area I look at. It's not what I buy, but for those, I get asked about stuff like the airlines and banks. Those would be my choices. Now, the energy sector has been in the doghouse for years, and it's possible we haven't seen the bottom yet. Fundamentally, we're looking at structural oversupply for this foreseeable future. America's frackers were a little too good at their jobs, bringing massive new supplies of crude online. Unfortunately for the industry, demand has been whacked by the COVID-19 pandemic. This is a short-term factor that will eventually pass, but if green energy becomes a larger and larger piece of the grid, demand for traditional fossil fuels may never come back as strongly. Realistically, fossil fuels will not be a major industry again anytime soon. It might never be again. But as we've seen with tobacco stocks, industry in a gentle decline can make solid investments if they're bought at the right prices. A Trump administration would not reverse the trends affecting energy prices. That is likely beyond the power of any president, but it would be less hostile to the sector and less likely to slap it with new taxes or regulation. We expect a second Trump administration to look for ways to further deregulate or otherwise encourage fossil fuel production. Fundamentally, different policies from a Biden White House would push for higher carbon credits, strict limits on coal, and reduce fracking. Now, in general, with the way things are showing in the polls and so on, I would not be bullish at this stage, obviously, on energy stocks. But I'm probably later on, I'm going to talk about a play that I see that makes a lot of sense. And if you follow me through it, you might say, yeah, I think I can do well, make some money with that. Now, I'm going to call this next one fun, this next company. And the only reason I'm going to talk about it is because it's always on CNN and it's always showing the tweets of Donald Trump. So let me tell you how that actually plays out. President Donald Trump has something of a love-hate relationship with social media leader Twitter. He fumes when he tweets, when his tweets get flagged as being actually untrue, and regularly criticizes the platform for allegedly silencing conservative voices. Yet he still favors the platform as his primary medium for communications, mostly bypassing the traditional media. The dirty little secret is that Twitter needs President Trump as much as he needs Twitter. Prior to the 2016 election, Twitter was very much and also ran in social media. I think it was pretty much gone. But the constant controversy of Trump and the tweet storms made the platform relevant again. So much of the news cycle stems directly from his tweets and from the reaction to his tweets by others, and that's expanded to other politicians, celebrities, and people of note. So it's amazing, this company. So this keeps eyeballs returning to the site, which in turn justifies the advertising spending that pays Twitter's bills. You follow how I'm going through with this? As a practical matter, a Biden presidency would make Twitter far less relevant. Biden is unlikely to rule by tweet. A Democratic administration also would be far more likely to force the site to crack down on controversial posts or accuse the site of facilitating hate speech. Longer term, there are serious political issues regarding Twitter and other social media platforms that will have to be worked out. First Amendment protections will need to be balanced against concerns about hate speech and fake news. That promises to be messy and might force changes into Twitter's business plan. But in the short term, the constant news of tweeter in chief should be good for Twitter's bottom line. So at this stage, if you own Twitter, I would be selling it completely or a large portion of it based on what will probably happen at the election. Now, since I'm talking about Twitter, I'm also going to address the other big giant, Facebook. And I'm going to share something in a few minutes. I'll probably shock a number of you, but you know, I think I've been known to shock in the past. But along the same lines, social media giant Facebook should benefit from another 4 years of Trump in the White House. Like Twitter, Facebook tends to take abuse from all sides. To those on the left, Facebook is a form of fake news and disinformation. To those on the right, Facebook represents the thought police, effectively censoring many right-wing voices. Now, I'm going to tell you guys something, and this is the shocking part. This was the personal shocking part to me. For many years, I had social media accounts, but they were run by my great tech team here. One of them is by my side right tonight, named Renee. And they've always run my social platform. So I never had an opportunity to have a Facebook account because I was never on it. So I created one finally about 2 months ago. And here's the part that was mind-boggling. I put it up. I like hiking and I like exercising. So that was pretty much the focus of the account. And you know, nothing political for once, nothing controversial for once, just an average guy, average life, just to kind of see. Here's the thing that shocked me. Okay. I got on there and, you know, I looked at a hiking group. So I got on there. I get 30 to 50 requests for friends a day. And here's the part that just is absolutely disgusting. And I can't believe that I didn't hear about it all the time in the popular media and so on. Every request seems to be a terrorist or a hooker. And, you know, I don't even go through it because you can't get any real friend requests. They're all bots. They're all bots. And I'm thinking, why would anyone ever use, other than get some information about groups or something, or they have a few, but it's so horribly run. And the fact they cannot get that, as big as the company is, worth several $100 billion, they can't get that problem under control. Completely inexcusable. Completely inexcusable. And so it's just, I was shocked as the first time I went on it, but I'm talking about Facebook, so I'm going to continue to talk about the stock. But social media probably will come under real regulatory scrutiny at some point. Former presidential candidate Elizabeth Warren already made it her goal to break the company up. That day is unlikely to come under a Trump presidency. After all, the 2016 Trump campaign ran what arguably was the most successful Facebook marketing campaign in history. It went a long way to delivering him to the presidency. Furthermore, the more riled up people are about politics, the more likely they're going to continue to read political feeds on Facebook, meaning more ad revenue for Facebook. So while President Trump bashes Facebook publicly, make no mistake, a second Trump administration won't lay a finger on the company. However, if you are in Facebook, I would sell a huge amount of the position right now and take profits going into the election because, again, it does look very much like Biden will win. Now, I'm going to do a couple of obvious ones, and then I want to focus on Biden and what to do if he's elected. But defense and aerospace companies tend to do well under Republican administrations because strong military spending tends to be a Republican priority. This might hold less true over the next 4 years. That's because regardless of who takes the White House, the focus is normally likely about normalizing the economy after the upheaval of the COVID-19 pandemic. But all else equal, a Republican administration likely means more defense spending than a Democratic administration. Joe Biden is pledged to, now this one plays a little closer to me, and I've talked a lot about this. Joe Biden is pledged to end the use of private prisons. At the federal level, and others in his party have taken the sentiment further. Elizabeth Warren went so far as to pledge to withhold federal funding from states that use private prisons. Now, the reason this one's particularly close to my heart, as I have many issues with the U.S. judicial system that I've spoken about, and you can see some of them on a lot of my videos and public talks at MikeLathigee.com. And I'll give you a couple quick examples. The feds get 97% of people who are charged with an indictment at a federal level take a plea bargain. And that's because in the plea bargain system, and let me give you a great example. This is one that everyone can identify because it got a lot of attention. Lori Loughlin in the college admission scandal, the prosecutors really screwed up her case, and it's likely she would have been vindicated and she would have won her case. Well, what happened, the prosecutors realized this, but this is what they presented to her. They said, look, you can go to trial and you have a good chance of winning, but we are going to charge you with these particular crimes, and you're looking at 40 years in prison. I'll tell you what, if you don't want to take that risk, we'll give you 2 months in prison and 100 hours of community time. What do you think the reason why 97% of people take the plea bargain? Because they make the consequences of going against the government to a point where the risk is too high. And then the government, with federally appointed judges that don't want to rock the system, pretty much always favor on the side of the government. And so 97% of people take the plea bargain. Here's the scarier number. 98.6% of people lose that go to trial against the federal government. Now, I know one lawyer, his name was Marcus Mumford, great man. He beat the feds 3 times in a row, got his defendants off when they were charged and they didn't take a plea bargain, and they had a 98.6% chance of losing. Statistically, the odds on that happening 3 times in a row are less than 1 in a million. Statistically, that's the math. The feds were so pissed off, they worked to have him banned to practice law in every state. And he was so hand-tied, so stressed, that he actually passed away from a heart attack less than a year ago. He spoke at a club meeting. He's an American hero. He fought against an abusive system and he won. And that's what the federal government can do to you. So I'll tell you something. I hate private prisons and the loveliest scumbags behind them. And one, because their whole premise is to fill them. And the one good thing about COVID is it's made it much more difficult for lobbyists to see congressmen and senators on Capitol Hill. But my personal opinion aside, and it's tough to do it because this is just about making money for you, it's possible that GEO Capital, which is a private prison operator, could work out a deal with the Biden administration to build and lease prisons that the government in turn operated. But you'd still have the potential issue of a shrinking prison population, as the Biden administration might be much more lenient on petty and nonviolent drug-related crime. The possibility of a Biden win is one reason why, listen to this, GEO trades, and that's the symbol, at a gargantuan dividend yield of nearly 17%. But if President Trump manages to pull off a second term, GEO Group might be one of the best stocks to buy for a rapid rebound. Again, I could never buy it because I want nothing to do with that scumbag industry. But I look at stuff that, people have different, there are people on there who believe in private prisons. I don't believe in it. My feelings on the U.S. judicial system. But my job right now is service to you. Now, since I'm going down here and I'm feeling a little dark, I get a little dark with what I was talking about. So after speaking about the GEO Group and lobbyists, I feel, as I said, a little bit dirty. So I think it's a good time to tell you a story of an extremely bad corporate relations situation. And it's something, and as you hear it out, you'll understand why I'm telling you the story. All of you on this webinar have heard the story of the fantastic success of the Las Vegas Golden Knights in their first few seasons. The players are fantastic. I've seen them. They're great in the community. I respect them. And the staff, they do a job and they do the best they can. My interactions with staff has been fine. Being Canadian, I wanted to support the local team, and I bought the best seats in the house, center ice, club level, which I shared with a few other club members. It was a 3-year commitment of $25,000 a year, and I took it on and really wanted to support the team that in the beginning was very unsure if they would get hockey sport in the Las Vegas desert. Here's what happened. The team did much better on the ice and financially better than anyone ever thought. In year 3 of my 3-year contract with the Golden Knights, when they qualified for the playoffs again in the 3rd year, I called to get my playoff tickets. I was told by my ticket agent that the management team was not giving tickets to original season ticket holders unless they bought tickets to year 4. I said that I signed up for a 3-year contract and not 3 years of regular season and 2 years of playoffs. I could tell the ticket agent agreed with me, but it appeared the Golden Knights ownership were financially so successful and there was so much demand that Bill Foley, the owner of the Golden Knights, thought, how can I make more money and screw the original supporters of the team? I've spoken to a few other season ticket holders who are equally livid. And I promise I will never go to another game, and will be sending this part of the webinar to the Golden Knights management team. I remember listening to Bill Foley talk about his love for Vegas and the heartfelt support he was getting from those who stepped up to get involved. The guy talks out of both sides of his mouth and is a disgrace to our community with a decision like this. I felt empathy for so many companies that have struggled during COVID, but I can tell you, when I sent a communication to Black Knight Sports and Entertainment, owned by Bill Foley, after it was not allowed to attend playoff games that I had rightly purchased originally, I can assure you there was no empathy in the letter. Bill Foley and his knucklehead management team should be ashamed of themselves for asking for community support and then getting it from people like me and then trying to figure out the best way to screw over those who supported them. For members on the call tonight, you know I never hold back. In every meeting and event, I have a story that is good or bad. For those on the call who this is your first introduction to me, just know I do not hold back, and I talk about many things that I think other people won't talk about or may not say. It doesn't stop me. I make sure you get value by being on this call, and then sometimes I deliver other messages. I know those who were sharing the tickets with me were also very upset of the antics of Bill Foley and his team. So in keeping going here, I'm going to address retail. And I may as well, tonight the focus is on gigantic companies that a lot of you own. And it's the right thing for me to do. So let's talk about Walmart. It's the world's largest retailer. It's doing just fine through the COVID-19 crisis. Unlike many other retailers, which were forced to close down, Walmart was considered an essential business allowed to stay open. But Walmart's outperformance isn't just a post-COVID phenomenon. Walmart has been aggressively building out its e-commerce presence, including online grocery ordering, pickup, and delivery. While Amazon is still the undisputed leader in modern retail, Walmart is the only retailer that can compete with Amazon at any real scale. Furthermore, with the economy in bad shape and the unemployment at these levels previously thought unimaginable, consumers likely will be trading down for the next several years to discount retailers, like Walmart. All of these trends were in place long before the election was on anyone's mind and will continue regardless of who takes the White House in November. But a Trump presidency should be a better scenario for the retail giant to its more relaxed stances on labor issues. You're less likely to see a hike to the federal minimum the federal minimum wage, or push to unionize or provide more generous health benefits under a Trump administration. As the largest private employer in America, and that's a big deal, again, I need all those listening to know I don't buy these companies, but because so many members do, I am giving what I think is the best guidance on what to do in the upcoming pre and post election. I would say Walmart is definitely right now a sell with a likely Biden win and to take money off the table prior to the election. Now I'm going to turn real quick just to political as an investment. President Trump has enjoyed generally a preferred relationship with Russia and appears to want a working relationship with Putin. All other things equal, that's a win for Russian equities. The country's stock are not for the faint of heart. They tend to be volatile and have major exposure to fossil fuels. You should be very careful investing in this space. The VanEck Vectors Russia ETF helps you to do that somewhat by diversifying your risk across 27 stocks at present. So I think a victory by Trump would be good overall for Russian equities, but very high risk. So here is a little bit on Biden. And for those on the call, I really tried to get through this in 59 minutes. I'm at 52 minutes, but I will tell you, I'm actually going to run over. It's a compliment if you want to stay and you're learning and you're taking notes and you can do stuff that make money for yourself. But if you go at 6:59 Pacific Standard Time, no hurt feelings. I get it because that's the amount of time. I'm going to estimate about 20 more minutes. Okay. And I'll get through everything, but don't hold me to that. I'm going to go a little longer, but I'm trying. So there's a few more industries I want to discuss if Biden wins. A Biden administration will mean more regulatory scrutiny for financial and energy companies and probably higher taxes across the board. But there will be opportunities. Infrastructure spending, green energy, and healthcare are all Democratic priorities and should do well under a Biden presidency. Now, this next one I think will do really well. I'm going to start with Brookfield Renewable Partners. It owns a portfolio of wind, solar, hydroelectric, and other green energy properties. While Biden is less focused on environmental issues that many of his Democratic peers, environmentalism and sustainability are a big part of his platform. Even if Biden wins the White House and Democrats lead Congress, the combined opposition from the party's moderate wing and from Republicans should make it very difficult to pass through the transformational fiscal programs such as, oh my God, sorry, don't get me going, the Green New Deal and Medicare for All. But the Green New Deal, $100 trillion, people, that's all I'll say. It is, however, still safe to assume that green energy and infrastructure will be a priority. That makes Brookfield Renewable Partners one of the best stocks to buy for a Joe Biden presidency. And is a good time to get placed right now. I would think prior to the election. I think that one will do really well. Here's another one. This next one that I talk about, I actually will look very strongly at personally buying this particular stock once you hear the industry and what I'm thinking. Coming from Canada, I will now address a subject close to my heart, marijuana. Democratic politicians take a more relaxed view towards marijuana and more likely to support soft drug legalization. Joe Biden does not publicly support marijuana legalization at the federal level, or at least not yet. But given his support for criminal justice reform, that would include decriminalization for marijuana use. It's not hard to see him coming around to full legalization over the course of a 4-year term. At the very least, a Biden administration would likely be a lot more lenient in criminal prosecution for marijuana-related crimes. Now, that brings me to the stock that I pick. And I really think this is something that will do well. Canopy Growth, CGC. Canopy is a leader in recreational and medical marijuana products in the United States, Canada, Germany, and the United Kingdom. Like most marijuana stocks, Canopy became something of a bubble stock in 2018 and 2019. The pot bubble burst a little over a year ago, and the shares today trade for less than half their old highs. We probably will never see a return to the bubble highs at any time soon, but under a Biden presidency, don't be surprised if Canopy and other marijuana companies emerge as some of the best stocks across his term. And I will tell you all on the webinar that Canopy is one stock I personally am bullish on to purchase. And I told you that. Having said that, others are thinking like me. And unfortunately, the stock is up 25% in the last week. And it's too bad we didn't do the webinar a week ago, but that's the way that it goes. Look, Biden will also be good for several electric vehicle stocks. In fact, one I did some research on is called Workhorse Group, WKHS is the symbol. And it not only makes electronic vehicles, but also electronic drones as well. Workhorse has a little bit of history with roots going back to 1998. Also, its focus isn't consumer vehicles, but delivery vans. The company originally started by converting vans made by other manufacturers, but it transferred to making its own original models in 2015 following a merger. The potential here is obvious. The delivery business is booming during the pandemic, and that's not likely to change once life is back to normal. Already, Workhorse counts United Parcel Service and Rider System among its customers. And a Biden victory could further smoother the road ahead for WKHS. Prodding and subsidies from a Biden administration would likely encourage companies to upgrade their trucking fleets to electric models. This sector would have strong tailwinds at its back with green-orientated Democrats in the White House. I think this company definitely is a good alternative to Tesla, that I just cannot stomach the valuation or the unpredictability of Elon Musk. So I think that's a much better alternative than putting more money into Tesla, which the reason I'm talking about it is so many of you are likely invested into Tesla. Now, infrastructure is an area that both Republicans and Democrats support. Martin Marietta is a building materials company that specializes in the materials used in large construction projects. Among other things, it makes crushed sand and gravel products, ready-mix concrete, and asphalt, and paving products and services. President Trump has expressed a desire to invest in infrastructure for most of his presidency. So it's likely that Martin Marietta will do reasonably well however the election turns out. But a Biden win should help speed up the infrastructure spending and making the symbol LMM one of the best stocks to buy for a new administration. Now, the good news for members out there is I know I'm throwing a lot of names and a lot of guidance at you tonight, and it's important that if you're going to do your research, come back and listen to this video. So as a member, you will receive this video, and it's part of your service. Now, I'm going to finish with an unorthodox higher risk energy idea. And this is the one I promised you earlier. And hear it through, because people go, what? An energy stock you're going to recommend or give guidance on? Yeah, listen to this. Okay. Energy Transfer is a pipeline operator and a particularly controversial one. The company is currently embroiled in an ongoing dispute over its Dakota Access Pipeline, which passes close to the Standing Rock Reservation. Opposing the pipeline is a rally cry for environmental activists. So why am I talking about Energy Transfer? It comes down to cash flow. Under a Biden administration, it is safe to assume the new pipeline construction will slow to a crawl. The permitting process will become lengthier and more cumbersome. Given the election year, the regulatory environment would become more challenging under a Biden administration, as he could require lengthy reviews to determine whether a project's economic value outweighs its impact on climate change. Paradoxically, this is good for many pipelines, particularly the large established ones. Now listen to this. Many operators have taken a growth at all costs approach, looking to build empire irrespective of profitability. A world in which no new pipelines get built is a world in which serial empire builders like Energy Transfer have a lot more free cash flow on hand. Without the temptation to spend it on new projects, Energy Transfer might speed up its debt repayment efforts, or likely, I believe, do massive share buybacks or huge dividends. And that's why I see it very strong, very healthy company. That's why I see it as a play if Biden wins. It's an industry that would be negative impacted, but the company would have few choices, and it would be the choices to the benefit of the shareholders. We'll see. But in time, the ET stock, you'd get a beaten down pipeline giant with world-class assets, and I believe an 18% yield on a distribution that Energy Transfer has so far maintained through the recession. Anyway, I can't, I wasn't going to talk about this, but I have to because we're talking about Biden. You could see me kind of pause because I was running through my head if I'm going to talk about this or not. But I have to address the concept of Medicare for all. All right. A Biden win would be bullish for a health insurer like United Health Group, UNH. United Healthcare is particularly well placed because it specializes in Medicare supplemental plans. If Biden is successful in providing a Medicare type solution, there will be enormous demand for supplemental plans. With respect to Democratic presidential nominee Joe Biden's expansion of Medicare, we're looking at 23 million new individuals who would be eligible for Medicare. So you understand why I gave that stock. Healthcare still is a political minefield, so be careful investing in the sector. But a Biden win would create a long runway for UNH. So on the webinar tonight, there's a combination of members and guests. For everyone, I hope I've given you a few good ideas that you can make some money. I am the founder and president of Investment Club of America. We hold monthly meetings 1 or 2 times a year. We hold larger specific investment events, and we've had an incredible performance track record in many projects that we've cashed in and cashed out with strong gains. Our current largest project, which was an investment in a number of California fitness facilities, was generating monthly cash flow for 6 years. But the gyms were forced to close due to COVID for 6 of the last 7.5 months. And now they're allowed to open at 10% capacity. It's crazy. So cash flow payments had to be put on hold. However, I'm in regular touch with the CEO, and we will work our way through this, and I believe come out stronger on the other side. But the point is, over the last many years that the club's been running, we have 100% track record on every deal that myself or someone very close to me, we play an active role to manage. We're on the board of advisors, active management role in the company, and so on. We're going to keep that up. For those of you who wish more information to join the club, it is simply just go to our website, Investment Club of America, just type that in your browser, and send us an email, and someone will be in touch with you to answer questions. Just say, I'd like to know more about membership. In addition to monthly club meetings and investment opportunities, we also hold large special events, and normally one a year. This year, we partner with famous economist Mark Skousen, good friend of mine, to host the Global Financial Summit. The event will be incredible, and you will hear about many subject matters that will help you with investing that are not discussed in the general media, similar to tonight's webinar. Here are some of the presenters, and I'm only going to go through a few, but Jim Woods, known as the Renaissance Man. He's the #1 financial blogger in the world, according to TipRanks, which ranks them. I mean, you've got to be really good to be a financial blogger and have that amount of traffic, people coming to listen to what you have to say. Brian Perry is the editor of the prestigious Cash Machine Advisory Service, and he's going to be talking about post-election investment choices in high tech and high income. Then, of course, there's Mark Skousen. What can I say? I mean, he should be nominated for economic Nobel Prize because of his theories of GO versus GDP. And you know, the guy's written 26 books. I think he's a genius. And you know, he's a leader of the freedom movement and libertarian movement. His wife equally is great. She spoke at a club meeting 2 months ago, and the feedback from the members was, please get her again. And I know a lot of you know Joanne. Sean Flynn is an economics professor at Scripps College, and he's written actually some of the top selling of all things textbooks. And he's going to talk about the new normal after the elections, how to survive and prosper in an age of higher taxes, growing deficits, and more regulations. And then we also have Barbara Kolm, and she's the vice president of the Central Bank of Austria coming. It's a very impressive lineup, obviously. And you know, I can, all the members who are on the call, they know whenever we put on an event, I don't think in the close to 10 years we've been doing our annual event, I don't think we've ever had a complaint. We always have had, that was great. I'm so glad I made time to come. And we give way more value than the cost. Now, there is something special. I'm glad you tuned in tonight, because it's very credible. And it makes a lot of sense. So I'll tell you what's going on. For guests who are on the call and you want to go to the event, you just simply go to globalfinancialsummit.co, not .com, .co, and tickets are $299 each, no tax. Now, this is where it pays to be on the call tonight. If you are a guest and you buy a ticket to the Global Financial Summit, you can simply afterwards send a copy of your ticket confirmation to service@investmentclubofamerica.com, and you will be given a 1-year complimentary membership to Investment Club of America. And let me tell you, every single renewing club member pays $299 to renew their membership. And many are on the phone right now listening. So you're getting $600 value for half the price. It's incredible. You're getting a free membership for a year, and you're attending an event. Now, for members, I also have great news for you. Your cost of the ticket is only $199 for being a club member. and frankly, for all the effort and time that the Investment Club of America has put into this event to make it a success. And I have a number of people who are coming out and not getting paid to volunteer and be part of the event and help. You know, that's where I was able to negotiate something on behalf of the club members. So your cost is only $199. So to get your ticket at $199 instead of $299, you must send an email again to service@investmentclubamerica.com, and our administrative assistant, Bob, will assist you to process at the lower price. So just to recap, for non-members, it's $299, and you get a free club membership for 1 year. For out-of-town members, don't worry, we video record all club meetings and send them to you. You can buy your ticket again at globalfinancialsummit.co, not .com. Then send an email to service@investmentclubamerica.com that you bought a ticket, and you'll get a free Investment Club of America 1-year membership. And again, for members, it's so easy. Just send an email to service@investmentclubamerica.co and just request your ticket at $199 instead of $299. Look, guys, I really appreciated it. I did actually really well on time in the end. We're at 7:10, I believe, by 7:11. By the end of that 11, we'll be done this call. It's been a pleasure. I obviously have fun when I do these. For those of you, this is your first time seeing me, just know it's more of this when you do see me. I do try to have very unique, out of the box and original ideas that can help the investors. I'm not right all the time, but when I have been right, we've seen gigantic runs, and the club has a very respectable and a fantastic record of performance for making money. So we hope that not only will you come to the conference, but you'll also join the club as a result of buying your ticket. So it's been great, everyone, and it's been a pleasure. And I'll look forward to seeing you guys November 6th and 7th. Good night, everyone.